Welcome my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice.
Bitcoin has reclaimed several major technical levels, but the bigger trend still hasn't completely changed. The interesting part is that Bitcoin is getting closer to the one level that could decide everything. Let's dive in. I'm still leaning bearish overall. My base case remains that Bitcoin pushes higher from here, takes out June's lower high around $67,000, grabs the liquidity sitting above it, and then reverses toward the larger liquidity pools underneath. So I'm not necessarily bearish on the immediate next move. I actually think Bitcoin could move higher first, but I don't think that automatically means the bottom is in. The key level I'm watching is around $67,000. This is important because the short-term holder realized price lines up with June's lower high, creating a major resistance zone. If Bitcoin breaks through 67k and successfully turns it into support, that will significantly weaken my bearish thesis. But if Bitcoin reaches this area, sweeps the liquidity above June's lower high, and gets rejected, that could create a very interesting setup for the next move lower.
The most important development is BIP 110. BIP 110 was a proposal aimed at temporarily limiting the size of data fields at the consensus level with the broader goal of addressing incentives around arbitrary data and refocusing Bitcoin on its monetary purpose. The proposal was rejected with the overwhelming majority of the network not following the proposed chain. While I don't see this as an immediate price catalyst, I think the longer-term debate is important. If Bitcoin continues supporting large inscriptions and permanent data storage, the blockchain can become increasingly expensive to store and validate. Over time, that could make running a full node more difficult and potentially increase the concentration of validation power. So while BIP 110 itself isn't necessarily bearish for today's price, I think the outcome important for Bitcoin's long-term structure.
Bitcoin's volatility index appeared to form a bear trap and is now trying to hold support around May's low. If this support holds and it starts expanding again, that could be bad news for Bitcoin because increasing volatility could accompany a move lower. Funding rates are also increasing again. That tells us traders are becoming more aggressively positioned long. If Bitcoin starts moving against those longs, that positioning could become fuel for a downside move. Now the dollar index has moved back into its old range after what looked like a false breakout. Normally, that should be supportive for risk assets, and we're seeing that with the S&P 500 continuing to rally. But Bitcoin isn't showing the same strength. That's something I'm paying very close attention to. If traditional risk assets continue rallying while Bitcoin struggles into major resistance, it suggests Bitcoin may still be relatively weak. Bitcoin is also still trading much closer to its yearly low than its yearly high, so from a bigger picture perspective, the market structure hasn't completely recovered. And that's why I posted on X. According to the SOPR by cost basis band, it still hasn't printed a true D+ spike. The absence of a D+ spike suggests one thing: the market hasn't fully capitulated yet. Historically, when price approaches the CVDD line, it has often marked strong long-term accumulation opportunities. That level is currently at $49,150. So what do you think? Has Bitcoin truly bottomed? Or is the real capitulation still ahead? Let me know in the comments. Have a nice day. Bye.